Right. Warm greetings to you, colleagues, and I would like to welcome you to our first lecture session in AUI 4863 for this 2024 academic year. So what we're going to be looking at in tonight's engagement, it will be a discussion pertaining to one of the business cycles that you were introduced to at undergraduate level, which is still also applicable in the context of what you're going to be dealing with at this postgraduate level in AUI 4863. So as outlined on the screen, for instance, with particular to topic number 3, right? But of course, I'm going to still come back to the other topics as we progress. But what I want to cover, or what I would like to touch on, is the most important things that are examined in the context of your examination. So for instance, if you notice with the orientation class that we held, I did give emphasis with respect to the degree of importance when it comes to business cycles. And I also took you guys through different past exam papers just to show you the applicability of such cycles in the context of exams, also in the context of an assignment situation. So without any further ado, the business cycle of note that we are going to be looking at tonight, it's with respect to the purchases and payment cycle. After we are done with it, I'm going to take you guys through the revenue and receipts cycle. Now, one of the most important things when it comes to cycles, because those are the the business processes or cycles that you would come across in the context of exam questions, in the context of assignment questions, they will ask you. There will be a particular cycle that the organization in question would be applying. It could be revenue and receipt, apart from the purchases and payment cycle. It could be something to do perhaps with inventory and production cycle, or it can also be something applicable with respect to the human resource and payroll cycle as well. So any of these business cycles can be examined in the context of an exam. Similar story with respect to assignments. So now, how do you go about studying and unveiling business cycles in a way that will be fruitful to you and also in a simplified approach? So what you see as presented on the screen is the purchases and payment cycle summary. So how I summarize these notes, you would notice that I've broken down, all right, or outline to you guys the different steps or stages when dealing with the purchases and payment cycles. And that's what I also refer to as functions or stages or phases in the purchases and payment cycle. And for each one of these stages, phases, or functions, you discover I also explain to you guys the objective or purpose of each one of these steps when it comes to performing a purchases and payment cycle process, right? So why do we, for instance, if I look at the first stage in the purchase and payment cycle, why do we need to determine the need for goods or the need for services, right? Why do we need to do that? All right? Because we cannot begin to just initiate orders with a supplier, which is stage number 2, unless we've established that there is truly a need for us to procure or for us to purchase, inventory or goods from the suppliers. If it was in the context of a service, we cannot be requesting a service from a third party unless otherwise there is a specific need for it within our organization. And that is the purpose of this particular stage, determining the needs for goods or services in that case. So the same thing would be true in terms of defining the purpose or objectives of each one of these respective functions. It's very important because it gives you a picture as to what is taking place in the cycle. It also helps you to understand better this cycle. So I'll do the same with all the other remaining cycles of notes that we're going to look into. Another thing we're going to look at as we are discussing this particular cycle, we're going to look at the source of information, essential and useful when you are performing a particular stage within this cycle. What is the source of information that is critical for that particular stage or particular phase to be, to be initiated. Okay, what is it that's going to be the motivating driver, for that particular stage within this purchases and payment cycle process? What is it that's going to cause them, the stage to be performed, in other words, right? So obviously that would be the source of information, which can be documentary in nature most of the times. So obviously that takes us then, of course, to the documents and the appropriate or relevant records which are going to be utilized at each one of those respective stages, right? So you definitely need to have an understanding concerning documents and records at each stage within the cycle. But why am I saying that it's important to know these things? Because documents and records also act as a form of internal control measure within a particular process, right? And then, of course, as much as we need to understand the documents and records that are being used, it also follows that we need to have an understanding in terms of flow of documents, all right? So if I'm saying, for instance, in stage 1, you're going to need to make use of a purchase requisition form. In other words, it has to be initiated at that stage, right? How many of these copies of this particular document does the organization need to generate at that particular stage? And who is supposed to be the recipients of those documents and why? And that's what is going to be explained with the flow of documents. And to explain, this particular aspect, what I'll do also, I'll be referencing you to, or taking you to the source reference in your prescribed textbook as well, so that you can gain a pictorial view of the flow of documents. It's important. Why? Because flow of documents is also another typical way of measuring the efficiency of the process itself, right? Now, and then of course, you're also going to look at the people, the department that are involved at each one of those respective stages in the cycle, right? Why people? Because people also act as a form of an internal control measure. Besides them acting as a form of an internal control measure in a cycle, people also would perform certain functions, certain responsibilities. Now, for us to be able to know who to hold accountable if something goes wrong, we have to know the relevant personnel that is involved in that particular stage of the cycle. It's very important. So that's one of the things we're going to also look at as we go through this purchase and payment cycle. Very important. And then, of course, I'm also going to touch on other things, which I also think that they are of importance to you guys, which is also what the examiner is likely going to be asking you about in the context of an exam, context of an assignment. The examiner can ask or test you on risks. In other words, they would ask you to identify risks, maybe at stage 1 in the purchases and payment cycle. When they're asking for risks, what are they referring to? Risks can be articulated as anything that could potentially go wrong in a particular stage within the cycle. It can also be articulated as a threat, as a harm, or as a hazard, something that is not preferable, something that may result in negative outcomes, negative consequences for the organization, right? So those are the things that will be attributing as risks at each one of those respective stages in the cycle. So there are several risks that could occur, for instance, when we just want to initiate a request for goods or initiate a request for a service, right? But in as much as there can be, risks that can be identified, there should also be mitigation measures, or what I would call internal controls, which can be, implemented by management in order to mitigate the identified risks, or in order to even possibly completely eliminate the danger, which is in the form of a risk here. But apart from the risk itself, another thing that they would ask you for, especially in the context of written assignments, they will ask you to identify weaknesses, guys. And it can be at any one of these stages within the cycle. So that's why I'm ensuring that I take you step by step within each one of the stages in this particular cycle. The same thing would be true even when we go to the other business cycles. I'll also endeavor to explain each stage within the respective business cycles of note that we're going to look at, right? So I just wanted to sort of like give you that picture so that at least you gain light as to what you're going to be looking at in this summary. Now, taking you back to to where we began. So we said we're going to look at the functions, different respective stages within the purchases and payment cycle, right? Before I even get into all of that, right? Why do organizations need to follow this particular cycle in the first place? Why do you think it's important for entities, business organizations, to actually effect a purchases and payment cycle? Here's the reason. Now, you'd notice that at some point in the process of running day-to-day operations, right, one of the needs for management, or even the board, one of the needs for management could be to procure certain items, meaning to say goods, which are physical in nature. It could be in form of inventory items, which they are reselling, right? So they would need to procure those, inventory items. So we need to have a systematic process that we follow in order to effect the transaction of purchase or acquisition of anything physical in nature. Same thing is true. There can be services that the organization would require from a third party, a special provider, a specialist in a particular fraternity. And maybe it could be in form of maybe for servicing, repair and maintenance of machinery of the organization. So obviously, that's a service which can be offered by somebody who is outside of the organization. So in that case, it will involve a service. I'm just giving that as a typical example of a service. So a request in this case in stage one, where we are saying determining the need for goods or need for services. A service in this context, it can be anything that is not physical in nature, all right? And so these are like intangible goods, so to speak, right? So intangible goods in this context will be a service. And then tangible goods, it can be anything like inventory, but essentially it's something that is physical substance that we can actually touch with our physical hands, right? So why do we need to determine the need for goods? Determining, so the objective for this particular stage is determining the need for materials and to communicate this to the purchasing section. So this is more relevant or directed when we are dealing with goods. So we need to establish whether, okay, are we running short of inventory items in our warehouse section, for example? If we see that we are running short of inventory, obviously we need to ensure that we get to procure the relevant amount of inventory items in order for us to ensure business continuity, all right? Because remember, whatever we are buying as inventory, it could be we are going to be reselling it as a retailer in order for us to generate revenue. Now, when we are doing that process where we are selling it to the customer to generate the revenue, that is what is articulated mostly as revenue and receipt cycle. So literally, purchases and payment cycle and the revenue and receipt cycle, they are like the opposite of each other, okay? But it's like the same process, but having opposite objectives. One is to generate revenue. The other one is to ensure that we procure the right goods or service on a timely basis, right? So now let's begin to then unveil the source of information that would cause this particular stage to be initiated, right? So obviously, one of the sources of detail that would actually help us to know that there's need for us to do a procurement of goods or there's need for us to request for a service would be the following items. So if we look through our production schedules, we are able to know the amount of raw material that could be needed in order for production to take place. So if we have production schedules, they give you a typical detail as to how much in terms of product are you going to be producing in the next coming week, in the next coming month, in the next coming 1 year, whatever the case. So it's a schedule in terms of timing and with respect to specific detail on the quantity of finished goods to be produced and also the amount of raw material that is going to be needed. So when you have production schedule, you're able to know whether or not there's need for you to procure certain inventory items in form of raw materials in that case. Then another form of source of information pertinent to this is inventory reorder levels. inventory reorder levels. So sometimes it's not always the case that you want to procure inventory items to initiate production. All right, so I'm talking about the production schedule there. But sometimes you can have a scenario where you are simply procuring inventory items so that you can then resell them as finished good items. So that's where inventory reorder levels comes into the picture. So normally inventory reorder levels, it's a form of an inventory system tool that we use to be able to manage our inventory levels, especially at the warehouse section. So if you want to know at what point should we initiate, an order for goods with the supplier, we need to look at our inventory reorder levels. In other words, we first have to set the reorder level to say if we are left with 500 items of a particular type of a product, we need to now start ordering from our suppliers before we can run short of the goods from the warehouse. Are we together? So with inventory reorder levels, it helps us to determine when to place an order with the supplier as our inventory levels are going down. And another way also, it could be ongoing operational needs. So if we see that, okay, constantly we need to have some form of inventory items available, so we need to then ensure that on a constant basis, it could even be on a daily basis, we are always ensuring that we have the right amount of quantity of inventory items in our warehouse section, right? So those are the sources of information that would cause this particular stage in the purchase and payment cycle to actually be initiated. In other words, to be validated. For me to know that there's need for goods or service, I need to have a point of reference. Why are we saying there's a need for goods or services to be initiated? What is it that is the pulling drive, or the cost drive in that regard, that is causing us to initiate the order with the supplier, right? So what documents would we see during this particular stage? Obviously, we would see the use of purchase requisition forms being used, right? We see the use of purchase requisition form. So a purchase requisition form, essentially, it's a document that is used, all right, to initiate the need for goods to be procured. So you'll see details in terms of description of the goods that need to be purchased, the quantity that needs to be acquired, and also it outlines in terms of standards. All right, what type of standards do we expect with regards to those goods that we want to procure? So besides the documents and the records, another thing you would see, which I would like to show you now from your prescribed textbook. So in this context, the prescribed textbook is the performance of audit engagements textbook, which is the orange textbook. I'm going to quickly open it so that I can show you some details from there. I want to show you the flow of documents, and I'll be explaining to you. For instance, there's an original copy that is going to be sent to a particular party. Why is it given to such, in this case, it will be given to the procurement division anyways, because they're the ones who would initiate the orders with the supplier, all right? Why do we need to give the original copy there? There's other copies that are also generated, and they are sent to different departments within the organization. Why is it that those documents are maintained? All right, so I'm going to take you to page 155 of your prescribed textbook, just so that I can show you some bit of details here. Okay, I just want to show you primarily the typical flow of documents with regards to the first stage. Right, so we're looking at this particular stage in the procurement or purchases and payment cycle, which is determining the need for goods and services. And like I said, here are the sources of information that would cause the need for goods to be initiated. So production schedules, inventory reorder levels, ongoing operational needs. So I'm just trying to show you that your notes, they are very much relevant and aligned to your prescribed text, right? So now, let's go to the flow of documents, because that's what I want to show you. So now, essentially, like as I've already mentioned, that with determining the need for goods and service, it's one of the most important stages, and there's documents that you would see being used in that stage. All right. So to touch on the people or department involved, it will be the user department that is going to be involved at that particular stage actively so. Right. So you see the user department, which identifies the need for products or services to be acquired. And when they do so, what they do is they would create or they would initiate a requisition form or a purchase requisition form. That's what it is. So now that purchase requisition form, I want you to observe, there is an original copy, yes, that will be sent directly to the purchasing department or what they call procurement department. Why is it sent there? So that the order that is going to be generated by the purchasing department with the supplier, it will be a validated purchase order. A purchase order without any accompanying or supporting purchase requisition, it's considered to be a fictitious purchase order. Why? Because it has got no supporting backup or supporting evidence substantiating the need for us to even actually be placing the orders with the suppliers in the first place. All right. So there's that original sent to the procurement or purchasing department so that it is going to be used to initiate the order with the supplier. Then there's a copy that has to be generated as well. That copy is going to be maintained at the user department. Why? For record keeping purposes. So when you see them having a triangle like this and there's an N inside of it, what it simply means is that particular document, it's maintained in the department that is initiated it, and they're doing so for record keeping purposes. So obviously it follows that the purchase requisition form in this case, it has to be sequentially numbered. All right, because we're going to be having records, right? Records, remember, it's a set of documents following each other sequentially. So we're going to have a set of records like that. So I need to know, for instance, okay, if I go through a pile of requisition form, maybe for the month of April, all right? If I go through a pile of purchase requisition forms, maybe there's about 200 of them, all right? If I want to know the one that we initiated at the beginning of the month of April, I need to have some form of a record number, or should I say reference number for each of those respective documents from number 1 up to the last document, so that it becomes easier for me to be able to trace this purchase requisition form to the relevant purchase order, of course, to the invoices as well. And why I'm doing that is just to ascertain completeness of the purchase transaction. That's it. All right. But anyways, let's come back to what we were looking at here. So what was I explaining? I was explaining to you the documents, right? And records and the flow of documents. So I've already explained that. So hence here you notice under the flow of documents, I depicted that, okay, look, there's an original copy which has to be initiated by the user department, right? Now, the first copy, all right, the first copy in this context, it's an original copy, is sent to the purchase department. And then, of course, there's one that is maintained in the user department itself, right? That's the flow of document with regards to determining the need for goods and services stage. Now, the other stage that we have to look at is stage number 2. And stage number 2, it deals with ordering of goods or services. Now, when you are doing the ordering function or when you're performing the ordering process, here's the objective, is to initiate orders for the goods, items required to maintain an optimum inventory levels, optimum inventory levels within the organization, that goods are always available. So in other words, the ordering process here, or the procurement process in this case for goods or services, it is essential to be performed in the purchase and requisition, so the purchase and payment cycle, all right, so that we always ensure that we've got enough amount of goods, inventory goods for that matter, for us to be able to perform a sales transaction to our customer, all right? So it's one of the reasons why this process has to be established. Now, what is the source of information for this? So the source of information that would initiate the ordering for goods or a service, it will be as a result of having received an authorized purchase requisition form from the user department in stage 1. So the moment that original copy that I was talking about here has been sent by the user department to the purchasing department, the moment the procurement or purchase department receives it, here's what they're going to do. They're going to have to begin with the ordering process. So what document do they use when they are processing the when they are processing the ordering of a particular good or the request of a particular service? Here's what they're going to use. They're going to use what you call, of course, the purchase requisition form that they've received from the user department. They'll also make use of the purchase order form. Now, guys, it's not only limited to this. There are other documents I did not outline for you here, but which are pertinent to this stage, right? And some of them would be, for instance, price list. You need price lists. You need quotations from different suppliers. You need, sorry, not price list, man, supplier list, okay? You also need quotations, at least 3 quotations, right? From 3 different independent suppliers so that you can compare the most suitable supplier in terms of looking at the pricing, quality, and all of those jazz. So you need to choose your suppliers on the basis of quite a number of factors, all right? One of them is reliability, quality standards, and also the economical side of it to say, are they affordable enough or they're too expensive and all of that, you see? So those are some of the things that management would look at when they want to establish or compile a supplier list. And the supplier list that will be compiled, it has to be authorized by the board of directors. Very important, colleagues. So I may not have written those down, but I'm just giving them as extras. It's part and parcel of the documents and records that are used during the ordering process. Why? Because it's also possible, all right, that the ordering personnel, if there's no pre-approved supplier list, they can collude with a supplier outside to overcharge the organization, all right? And then they'll be soliciting the difference between the standard price and what they've quoted. So in other words, if there's no supplier list, it will cost the company financially. Why? Because they'll end up paying unnecessarily high prices for goods or services. So that's why it's important to have pre-approved supplier lists and then or at least make use of 3 quotations, all right? 3 quotations from different suppliers, and then you can make your decision based on that. All right. Flow of documents. So there's an original copy, yes, which is given to the supplier. So we are talking of the purchase order in this case, not the requisition form. The requisition form, once it is received in the, at the order department or the purchasing department, they will keep it, all right? And they would use that as the reason for them to place an order. So when they're placing the order with the supplier, what they will use is the purchase order form, all right? But the purchase order form comes in different ways. It could be something they have to fill up online. It could be something that somebody can go to the store, in person, and then, over the counter, they conclude the transaction. Or it can be telephonic, depends. But mostly we need to have a document somehow, some form of substantiating evidence that we have actually placed the order with the supplier. So in this particular context, you would have a purchase order form. Original copy is sent to the supplier. There's a copy that is maintained and issued to the accounting department. Another copy is sent to the receiving section within the organization. The third is sent to the user department so that they can have confirmation that their order was placed with the suppliers. That's why it's sent to the receiving department as well. So the user department in this case. Then, of course, there's one that is kept for record-keeping purposes in the purchasing department. So let me take you to your prescribed text so that you can see the flow of documents for yourself. So look at this, guys. Now we're in the purchasing department. We have the purchase requisition form that has been received from the user department, requesting that, hey, we want goods of this amount, so please can you place the order with the suppliers? All right. So that is what that document is giving that's the content that we see from the requisition form, which would help us now to choose the most suitable supplier after we've negotiated the terms, okay, and conditions. So we need to check them in terms of quality, reliability, and all of that, pricing as well. So then we can initiate a purchase order whereby the original copy of the purchase order is sent to the supplier. Another copy, so there's a copy that is maintained and distributed to the accounts department. Why is it important to send a copy to the accounts department? So that when we are now doing the payments to the supplier, we are paying for goods that were truly and actually ordered by the organization. Because otherwise, we can end up paying goods that were never ordered by the organization. That's a rich now. We can pay for goods that were never ordered by the organization and never received by that matter by the organization, which would ultimately result in financial losses. Why? Because there's no benefit that the organization is going to receive from that. So it's important that there's a copy sent to these guys. And another is sent to the warehouse department. To be more precise, that is the receiving section, all right, of the warehouse department, because the warehouse is made up of 3 sections. There's a receiving section, there's a dispatch, then of course there's the storage section within the warehouse. Those are the 3 distinct sections that you would find in the warehouse. So where there's inventory counts taking place, normally it's at the storage section of the warehouse. Okay. Now there's another one sent to the requisition department, the one that has initiated the requisition from the first place. Why are we sending it to them? So that they can be assured that, look, the order was placed for the good that you requested for. Then, of course, as always, we need to have another copy for record keeping purposes where this is taking place in the purchase department. All right, so this was video A, colleagues, of lecture 1. In video B, we are proceeding to the next stage of the purchases and payment cycle, which is receiving of goods and services. So we're going to look at this in video B, stage number 3, because we are just left with a minute now before it cuts us.